Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everybody. Welcome to Finance Friday's edition of Wealth Coffee Chat. First of all, my apologies for being a little late. I had some technical difficulties with my mic. If anybody can let me know if the mic's working fine, or else I assume that it will, just from the test that I've done so far this morning. So I would like to start as I normally do. Why is it called a fixed rate? Because it's fixed until it isn't. And that will be our topic for today. I'm just going to discuss fixed rates, what to look for, some of the ways to structure and how you could use fixed rates. But as always, starting with the RBA, they're going to be... Morning, Jeff. Yeah, thanks for joining me. It's been a while. Next week, the RBA are going to meet, and all indication is that the interest rates are going to be increasing. And what I've noticed over the last couple of weeks, especially with the banks, is they have started to increase their fixed rate. So it begs the question of, what are we doing? Do we start looking at fixed rate? Is it something that can be part of your strategy? And in the past, when fixed rates were really low, people would take the opportunity to jump on the fixed rates. Now, I remember, when we had fixed rates at the 1.99 interest rate, and we had clients who've locked it in for 5 years, enjoyed a great run, and then after the 5 years, their interest rate went from 1.99 to somewhere around 7%. So there is a downside to that in regards to people forget all the benefit they've had over the 5 years, and now let's just call it the reality of the market interest rate. Their repayments have tripled, and they haven't spent time to prepare for that. But that's I guess another conversation to have. Today is about fixed rates and what are we doing? Are we taking advantage of the fixed rate? How do we take advantage of the fixed rates? What are things to look out for? Oh, that's an amazing result, Jeff. Being able to lock in the rates. Now, what I've found is that often it feels like there's a slight gamble, right? Like we're betting against whether interest rates are going to increase or not in the future, and we want to take advantage of, locking in the rates so that if interest rates go high, if variable rates go higher than the fixed rates, then we aren't we're saving interest during that period. What I often don't find that clients do, and I think it's very important, is the question of how do you use fixed rates as a strategy so it fits within your budget and it helps you achieve your actual goals. Now, what I mean about that is that, we could look at fixed rates today and variable rates, are currently lower than fixed rates. And if you were to then lock in the fixed rate, you would you would end up paying more interest because the fixed rate is higher than the variable rate. But if you fixed it for 3 years and over the next 6 months, variable rates increase, to 1% higher than the fixed rate, then you are ahead and you will continue to be ahead for the next 2.5 years. So there's a huge upside to that. And so it often begs the question of, when do we think interest rates are going to increase? How much are they going to increase to? And whether we could sustain the fixed rate over the fixed rate period. So generally, when I run through these with my clients, I take the approach of, here's the forecast. If we were to continue paying a higher fixed rate over the first year, knowing that the next 2 years we're going to benefit from paying a lower interest rate compared to the variable rate, then it becomes worth it. But another question I also ask them is, we don't actually have to fix it for the full amount. So is there a way to leverage the fixed rate and hedge against variable rates increasing, and by how much? So often we end up with a conversation around, let's fix half of it, leave the other half as a variable. You could pay more into it. Fixed rates, when the variable rate increases, you've paid, let's just say you've got an offset account against it and you've paid more into the loan. So the interest on the variable rate will be lower, even though the interest rate being charged to you is higher. And on this side, your fixed rates are set. So your budget, it sits all within your budget, and you're taking advantage of a lower rate compared to the variable rate. So you don't reap the full benefits of a fixed rate, but at the same time, you're taking advantage of the different features of the products to actually help you reduce the interest that you're currently paying. Now, I've had other clients. One of my clients, actually, we sat down and we went through fixed rates and variable rates when, a few years ago. And what we did was we set it up so that I asked my client, how much do you think you can pay off in the next 2 years? And the client had a loan about $800,000 loan, and we decided to leave $200,000 variable over 3 years, and the rest of the $600,000 we fixed it. And the goal was to take advantage of the fixed rates because they were low, but also create the opportunity for the clients to pay off their $200,000 in the next 3 years. So there were some goals in terms of paying off your home loan. After the 3 years, my clients managed to reduce it down to, I think it was like 50,000. And then we sat down and we reset the strategy again. So, how much of it is fixed? Is fixed rates at the moment great? We ended up consolidating into a variable rate because, the market dropped dramatically over that time. But that's a way to use fixed rates as part of your finance strategy to actually take advantage of where the variable rate market is moving, but also it gives you certainty in terms of your budget. So knowing that, my client knew on 600,000, that's how much they paid, and that's how much they'll pay for the next 3 years. And so it makes it very easy to budget, but also there's a flexibility on the other side of, if he had more money, which obviously he did, and he put into a loan, he ended up paying off the loan a lot faster. So when you talk about fixed rates, you don't have to fix the full amount. You can use different splits to take advantage of, both the variable and the fixed. In the past, we could only, on your fixed rates, we never had offset facilities. We actually have lenders now who actually have offset facilities against fixed rates. So now you get the benefit of variable rates and paying more into an offset account and having a 100% offset against a fixed rate. Now, certainty in terms of how much, the rate isn't going to move over the next 3 years, but also being able to pay more into it helps you create a very good budget. And it, sticking to a budget for a 3 or 5 year period can potentially accelerate how fast you can pay off your home loan. Now, a couple of other things to note is that with fixed rates, when it comes time to fixing the fixed rate, we have to be very careful, especially in a market where fixed rates are moving. Because you can have a conversation with your broker at the beginning of the month and your fixed rate could be 6%. By the time you submit the application and get ready to settle, that fixed rate can move. And if that fixed rate moves, you'll get the fixed rate that's being offered on the day of settlement. Now, in order to help clients be able to know with certainty, what rates are actually going to be applied to the loan, the banks have what they call a rate lock fee. So basically a fee to lock in the rate at the time of discussion. So at application, we can submit the rate lock. Well, we can pay the rate lock fee. Some lenders actually let you lock in the rate for free. Majority of them get you to pay a fee to lock in the rate. But paying that at application means that the rate that you've discussed with your broker is the rate that's going to be applied at settlement. Because as we know, it could be 4 to 6 weeks between application and settlement. And during that time, fixed rates could move. And I've had a few clients who've had that. And we've had the discussion, but they chose not to. And then at the time of settlement, they ended up with a higher fixed rate. The other another thing to note around fixed rate is the cost to get out of the fixed rate. Now, banks call it the break cost, but break cost is based on how much money the bank potentially would have lost if you broke the fixed rate contract. What that means is that if your fixed rate is currently higher than the current market fixed rate and you break the contract, then when they take the money to lend back to other people, they have to lend it at a lower interest rate. And so what the banks tend to do is they work out what that loss is and they charge you that loss and they call it a break fee. Now, the reverse is also true in the fact that if the rates go up, now the banks can take the money that they've lent to you at a lower interest rate and lend it back to somebody else at a high interest rate. I've yet to see any lenders who would pay that money to the clients or to their customers. But in theory, I think that if they're going to charge you a break fee because they've lost money, maybe they should share, some of the profits they get if they make money from you breaking the contract. Hi, Kobe. Thanks for joining me. So there is a consideration in regards to the break cost, and the break cost is, obviously based on how long there's left on the break. Sorry, how long there's left on the fixed rate, and what loss they would have incurred based on the current rate, and so the rate that you locked it in and the market rate. We do have lenders out there who give you the opportunity to lock in a 5-year fixed rate, but after 3 years, they actually let you break out of the contract without any break costs. Now, I'm just going to plant this seed in regards to that. Some of these lenders, what they do is they use the 5-year fixed rate and they remove the bank assessment rate, which means that they don't add the 2.5% to 3% on top of the current rate to assess how much you can actually borrow. So if fixed rates are similar to variable rates, you can get lenders who will assess you based on the current market rate. However, they are going to lock you in into their 5-year fixed rate in order for them to apply that assessment rate. But after 3 years, you can break out of that fixed rate contract without any break costs. Great strategy to potentially increase how much you can actually borrow, but I'll save that for another Wealth Coffee Chat. Again, my apologies for the delay this morning, but I hope you found this conversation around fixed rates valuable. If you have any questions, reach out to me or my team, or just have a conversation with your broker around it. We've had about 5 banks who have moved fixed rates. So there is I guess, a window where you could look at whether you could fix the rate before they increase, because they've told us they usually give us about 2 weeks. And have a conversation, see where it's going to fit into your strategy, see how it's going to help you, pay off your home loan faster, or hedge against, interest rate increases, because it sounds like there may be a few that's coming this year. So yeah, worth having a chat at this time. Kobe, the Finance Wealth Coffee Chat is every Friday, but our team do Wealth Coffee Chats every single day on various topics like property management, financial planning, coaching, and accounting. So you get a wide variety of specialists talking about what's happening in their world. Jeff, no intention to sell here, no break costs, trophy yellow. Wanted peace of mind. Yeah, like I was saying, it's great for budgeting, which gives you, certainty around your cash flow, and hence, gives you peace of mind, and not this constant, is rates going to move up? How much more money do I have to put aside? All those sort of things. So yeah, it's you've achieved a great result, Jeff. So yeah. Everybody have a wonderful Friday. Enjoy your weekend, and I'll catch up with you soon.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.